Hello, hello. I would love to hear if y'all can hear me. I'm trying a new sort of setup situation with some streaming software. So I'm not 100% sure how it looks, if the mic's working.
Hello, hello.
I got some feedback from my computer, so you might hear me talking to myself. Hello, Ma-san. How are you? Are you able to hear me? How are you this fine? Well, it's getting to evening for me, but okay, great. Thank you for letting me know. How you doing? Anything on your mind? Have you been looking at any interesting investment ideas or doing any sort of fun activities this weekend? For me, I am preparing to have a sort of a board game night with some friends. So we'll see how that goes after this live stream. Thank you. The aspect ratio is a little strange. But that's okay for this. Maybe I can make myself smaller. Anyway. So one thing I'm considering doing is maybe with these live streams, if anybody's interested, I might come with some prepared remarks and then just go from there. People can ask me questions if they want. Let's see. Okay, DMART from India is a good investment. Same business model as Walmart. I have heard of DMART, but I've never actually looked at the business too intensely. I'm wondering if you have any information. Is it a publicly listed company? Is it listed in India? Because if that's the case, then that probably is something I'd be interested in. Investors were probably mistaken to ever sell out of Walmart. I'm sure Warren Buffett kicks himself every time he looks at Walmart's stock price. So yeah, that's definitely an interesting one. Sorry, I'm just messing with the quality. I don't know why the stream output kind of looks a little fuzzy to me. Hey Yankee Doodle, greetings from New York City. Still licking my wounds from my 250k drawdown on Alibaba. Ooh, that's gotta hurt, man. It's gotta hurt. But I wish you the best of luck with it. I haven't given up on my position with Alibaba, but I hope you're ready to deal with the perhaps emotional turmoil that you might be facing. But best of luck to you on that one. With a 250k drawdown, that's a pretty hefty portfolio size you got there. So at least you have that going for you right now. Glad to hear that. So Monish Prabrai is possibly invested in DMART. Oh, that's really intriguing. I wonder if that's something that would be listed in there. Well, I think, what is it? Foreign investors aren't allowed to own more than 5%, or maybe it's 10% of a company in India. I wonder what position size he has. Let me pull up DMART. I can try to do a little show screen thing here. Let's see. Google Chrome. Where are we on Chrome? If it's, sorry guys about this. I'm trying to pull up my, this is fine. Sorry, doing some coding projects. Here we go. All right, let's see, DMART. I know nothing about this company, but I'd be very interested to learn more. So if I can pull up Morningstar, it's one of the places I like to go to check out companies. Avenue Supermarts Limited, okay. All right, so as you say, it is engaged in the business of organized retail. It operates supermarkets under the brand name of DMART, okay. It provides food products under the categories of food, non-foods. Yeah, so looks like it's a general sort of retailer. Cool. The thing about Morningstar is that it doesn't do quite a good job converting into US dollars, which is basically the only currency that I can understand. So let me log into Ticker real quick because there should be a toggle there. So let me pull up Ticker. Okay, so here we go. Let me go back to DMART here. Maybe check out some of the financials here. Okay, DMART in US dollars. Sorry, my Indian rupee conversions are not the greatest off the top of my head. But it has $41 billion market cap. Okay. It's a pretty big company. How's it performed over its lifetime? Let's see. 48.6% CAGR. Really happy to see that. So Hassan, I have a question for you. What do you think DMART's competitive advantage is? Is it a scale thing where they're basically the only providers? Because I'm not too familiar with businesses in India or, I'm familiar with Walmart, and if it is sort of a replica of Walmart, then I kind of get the investment thesis, but what are the competitors like? What's the competitive landscape? Because I'm wondering the margins, they're pretty slim, which is fine, especially for major retailers like this. Costco, for instance, is one of the best businesses ever created, and their margins are minuscule. So, yeah. I'm gonna look at their net debt. So they don't have that much leverage, which is kind of nice to see, especially for a retail company. I wonder if they have plans to capture the logistics supply chain network that Walmart is really trying to compete with Amazon in lately. Cool. I'll give this one a look. Thanks for the idea. But yeah, if you have any insight about this or any good write-ups, please feel free to send them my way. After dinner investor, hey, good to see you. Advice for hiring software developers on a project-by-project basis. Non-investing question. Sure. So, yeah, there's the best way I would say is to kind of go by word of mouth. Now, there are websites like Upwork and Fiverr, websites like that where you can find freelancers. But I think as with most businesses, word of mouth referral is probably going to be the most reliable because there's more, the person has a little bit of skin in the game by recommending somebody, especially when it has to deal with spending money. They're not going to recommend any Joe Schmo. But I am a software developer. just putting that out there on a project by project basis. I'm available, so feel free to reach out to me as well. I can also potentially leverage my network of people that I know so feel free to send me details on the project. Be happy to refer some people to you. But yeah. Also, one place you might look at, depending on what your timeline is for your project and your budget, you might look at finding some developers that have just graduated from coding boot camps. That would probably be a good way to find inexpensive labor for, solid foundations for a developer. So yeah, it all depends on your project requirements. And if all that fails, then yeah, definitely check out Fiverr or Upwork. Those are two good resources. I don't really know because I don't have experience actually hiring developers. I don't know if the prices are fair, but yeah, I'm available as a resource for you if you want to bounce questions off in private. You can send me a DM on Twitter, and I'll let you know. Hey, this guy's fairly priced. This guy's overcharging. Whatever, his skill set seems not to match your specs and all that. So yeah. Long story short, hit me up in the Twitter DMs. Or you can email me. I've got a business email for this channel as well, so you can find that on my channel page. Tim, hey, I'm here, but on a plane going to LA. I won't be here long. Hey, neither will I, Tim. But thanks for stopping in. You got that in-flight Wi-Fi. Good investment. I appreciate you spending a little time here. This is going to be a pretty short stream, so just kind of checking in, testing some of this new software. I'm trying to get this Streamlabs software to work for the stream. Hopefully, increase the quality a little bit. But so far, I'm looking on YouTube and it's not looking like the greatest quality. It's a little stretched. Maybe that'll fix itself with a little bit more tweaking. So, Wesson, not. This is going back to DMART. Not only the provider. They do have competition, but they're really good with capital allocation. Okay, yeah, that's very much a necessity, especially in a cutthroat retail business with a lot of competitors like DMART. So if they're trying to control their logistics, basically if they're trying to copy Walmart or Amazon, then they should be in pretty good hands. So cool. I probably will take a look at that. Appreciate it. Hey, Lars. Did you take a closer look at Global Payments? Interesting company with a pretty low PE at the moment. No, I haven't. If you could pop over the ticker, though, I can maybe check out. It's called Global Payments. Yeah, I haven't had a chance to look any further into this one. Provides payment technology and software solutions for cards, electronics, check, digital-based payments in America. All right, so merchant solutions issue. So what it looks like to me is this company is a sort of a Stripe, potentially a Stripe competitor, which begs the question: what do they have that Stripe doesn't? Because Stripe certainly has the scale factor on them. I'd definitely love to hear if you've got any insight into that. It's a pretty big company, as you can see here. Let me see the price chart. So they've sort of been hit in the past year. The price has been a lot with a lot of these tech software type businesses. They've been hit really recently. But one thing that's really attractive, especially when evaluating software businesses, is growth in revenues, which from these numbers, this is certainly a great sign to start off with. We're also seeing, let's take a look at the gross margins. Gross margins, in the 50s, they fluctuate a little bit up to almost 70% back in 2018. And one thing that's actually surprising me is they are profitable from a net income standpoint. So that is shocking. What is it that you love? Well, I don't know if you love this business, Lars, but what is it that you like about this business? I think that would be helpful for me to hear. They do have a little debt, which isn't, well, not a little debt. They have quite a bit of debt, but which is a little bit troubling for a company that really seems that it could be pretty asset light in most regards, depending on whether or not they have a sort of a hardware solution or not for payment processing. Maybe I'm misunderstanding the business just from the brief overview, but it seems like it's a software. So they have payment technology and software solutions. So if they have point of sale stuff, then I can understand maybe the margins are a little bit lower than I was expecting just taking a look. Hey Tim, yeah, appreciate it. Help up the huge YouTube numbers. If you guys could give a like to the to the live stream, that is what YouTube loves, and it would be nice for other people to see that I'm live. So I would appreciate that. Thanks. Okay, so they do have net income. That's that's a shock these days. Cash flow per share. So let's see. Capital expenditure year over year is pretty much increasing steadily. So want to take a look at what the returns on those expenditures are, if that's growth or maintenance. So let's see. Currently, they have about $8 per share, and their share price is $125. Okay. I don't love that ratio, but it's not terrible. Now, the return ratios aren't spectacular. I'd still be probably willing to give this business another look, but my main concern is why are they competing in a space with Stripe, and what's going to prevent Stripe from eating their lunch? That's my first instinct, really. Debt is kind of a red flag for this company. Yeah, I agree. Can't tell you their product solution is better than Stripe. Have to take a closer look as well. Yeah. So those would be some of the things that I'm thinking about. But could be worth investigating further. I'd also like to know sort of what the ownership structure is for the management, how much of the founders are still in the company. Valuation is interesting. Yeah, I mean the fact that they actually are making money in this day and age, and they're not trading at 50 times revenues or anything, is refreshing, I have to say. Because even some of the software companies that I'm really interested in looking at, like Wix, for instance, they do not have any net income. They seem to be investing really heavily, but one thing they do have is a lot of free cash flow. So that's something. Yeah, so for software companies, it's hard for me to start off with looking at a valuation, especially without understanding the product. It seems to be a useful thing. You know, their main competitors, though, are probably companies like PayPal, Stripe. The free cash flow, okay. Looking at this, see, Ticker doesn't have the best display of the free cash flow, the statement of cash flows. But these numbers, I have to say, are damn impressive. As the revenues grows, the free cash flow grows too. That's very lovely to see. So they usually show a couple of multiples. Price to sales 4.5 price to sales ratio. Not sure if that's egregious or not. Yeah, because I don't know much about the business. But yeah, thanks for bringing this to my attention. I'll probably take a look. But yeah, I agree. The debt is concerning. That's my biggest concern right now in the competition. Cool. Yeah, my pleasure after dinner, investor. My pleasure. I will. I'll hear from you soon. Thanks. Hi, Jasmine. Hope you're doing well. Yeah, I sure am. It's a great day. Great day. It's a little cold, actually. But other than that, we're happy. In your Q&A a while back, you mentioned your aim to only have around 4 companies in your portfolio. Is that still a goal? And if so, how's that going? Yeah, I've been. This is something that I've continued to struggle with because I have not reached that goal, but I would say that I am still trying to trim some positions from my portfolio. It's a little too much of a scattershot approach right now. I have a lot of something that I haven't done. I've only done in the past couple of years is try to have these sort of tracker positions, which maybe 1%, a half of a percent of my portfolio, just to have it in there. And sort of the goal with that was to hold me accountable to continue to research these companies. And for some, I have continued to research. Nintendo is one of those companies where I have a very small position, but I haven't actually bitten the bullet. And the valuation now is actually making me a lot more excited about investing in that company. But then I come back to the question and ask myself, would Nintendo pass the filter? If I could only have 4 stocks in my company, would I be happy with that as being 25% of my portfolio? So, yeah, I don't want to just do a wholesale liquidation of my portfolio and build it up back from that way. But I do want to remove this idea of this scattershot approach because it's not really doing anything for me, and it's kind of distracting me because say I look at a price change in one of those tiny portfolio positions, it's going to affect me emotionally a little bit, and that's just some drain that I don't really need. But yeah, to answer your question, still trying to trim the positions down. I don't have the time or inclination to track 15 positions. It's not going to be possible for me. So, yep, big believer in the concentration idea. Gauzican, do you see Berkshire as a good value now or an inflation hedge? Blake. Hold on, guys. Blake Reynolds with the $5 super chat. Wow. Thank you, Blake. I saw your comment on one of my videos the other day. It might have been the other live stream where you said you had some information about Nintendo. I have an email account, but I commented it again, but I'll put it again into the chat if I can, and feel free to send over any information. But I really appreciate this $5 super chat. Big ups to you, man. Thank you for tuning in. Your question, for those of us who are not on Twitter, what is a good way to reach you? Yeah, okay. So let me post that in the YouTube chat. There is the email address there for you, Blake. I really appreciate that $5. Thanks, man. Yeah. Looking forward to hearing from you in the email. Gauzican, back to you. Do you see Berkshire as a good value now as an inflation hedge? So the thing with Berkshire is, yeah, I've been sort of listening to people's analysis on Berkshire. Berkshire's kind of it's almost too big to sort of wrap your head around. But some of the things that people are doing a sort of a sum of the parts analysis for Berkshire. So they take a look at what some of their biggest wholly owned subsidiaries are worth compared to. So if the BNSF, their railroad, they compare it to some other of the larger publicly listed railroads. They get that plus the 25% but they have the massive stake in Apple, which is I think north of $160 billion or something. Don't quote me on that. I'm not a Berkshire expert, so but basically taking some of their larger publicly traded or larger subsidiaries plus the cash plus the equity portfolio and summing that up, and the conclusion seems to be that it's trading at a discount to that sum of the parts. So if I find a good analysis on that, I'll probably do a video on it. If you have one as well, I would love to see it. As far as it being an inflation hedge, or the rising interest rate hedge, they have a lot of businesses so they have a lot of hard asset businesses, I would say. So it's possible. Yeah, I mean, it's the same way they have a lot of banks in their portfolio, their equity portfolio as well. So that's one way you could play it as well. But yeah, I don't know if I necessarily think of companies in the terms of a hedge against interest rates or anything, because I don't think I have any particular insight into where those rates are going to go. But I think just solely on a sum of the parts, Berkshire does kind of look tempting, but there are probably, for small investors, probably better opportunities. But Lilu just invested in Berkshire Hathaway, so that's that's a kind of a nice sign to get going with the analysis there. Hey Tom, what are your thoughts on magic formula investing as a better passive strategy than index investing? It's a good question. Let's see. Magic formula, I the thing with magic formula is I've always used it as an idea source. So periodically I'll pull up the whatever it is, the magic portfolio. And I don't know if I want to magic formula. Yeah, and I'll basically just run this screener to look for ideas. Now, I know that's the exact opposite way that Joel Greenblatt designed this screener, but what can I say? Maybe I'm a little hubristic thinking I can, pick stocks from here. But I actually don't know the results, say comparing the S&P to the magic formula, especially recently. I know in the past it has definitely trounced a lot of the indexes. One of the things I was doing recently, I was reading this. I was reading the Acquirer's Multiple, and he goes through here and basically makes the case that the magic formula is nice. Investing in companies like Charlie Munger, high quality companies at a fair price, is nice. But what's even better is doing sort of an approach using the Acquirer's Multiple, which is basically a deep value approach looking at enterprise value. So that's actually something that's kind of intrigued me as well. You've probably seen stock compounder Brad Kalner's videos about magic formula investing. He basically does this. I think he has a small portion of his portfolio allocated to magic formula companies. So I would definitely check out him for a better resource. But yeah, it's a lot of hassle. It's not as straightforward as just buying an index fund. So that's one thing to consider. But based on the metrics used, I think that intuitively it should outperform by a large margin. So take that for what it's worth. Yeah, as you say, you have passive in quotes, but as we know, it's not quite passive because you have to be disciplined, which is going to be the hardest part with magic formula investing. You don't want to stray from the formula at all. You want to buy at the beginning of the year, sell at the end of the year, and repeat. And yeah. But let me know if you've had any experience with it, because I'd be interested. If this whole stock picking thing doesn't work out for me over the long term, that is probably the next step, would be sort of the upgraded S&P. So whatever that means, it might be the magic formula though. So Crastius, hey, can you let me know thoughts on NWL on ASX? Okay, sure. NWL. Let's see. Newell Brands. I think, is this the company you're talking about? No, probably not. There it is, ASX, sorry. Net Wealth Group Limited. Financial services company, okay. I don't have a ton of experience investing in financial services companies, just as a heads up. Not that I don't know if I could understand them potentially, but so far they haven't come up. But I know that Monish Pabrai tends to stay away from financial services company because he's had a lot of blowups in the past. So that would be, that's my first concern, is if Pabrai has trouble with it, then I don't want to count myself out, but yeah, it's probably not in my circle of competence right now, but we'll take a look. All right, so about $3 billion US market cap. Okay. Oh, this is a new feature. This little info. So let's see. Financial services. Let's see what their balance sheet looks like. Okay. Cash and cash equivalents. Let's see. So they've got about $64 million in cash. Let's see. They shouldn't have any debt to speak of, really. Okay, that's good. So, oops. We don't want to look at goodwill. All right, so yeah, to be honest, I don't even know where to begin with this. I really don't. I need to know how the business operates, what it actually does, before I could even make any sort of judgment about it. If you have any insight into that, Crastius, I always love to hear what you like about the business, and maybe I can go from there, because is it the valuation that speaks to you? I do see that their net income is growing attractively, so this is nice. Revenue, kind of the same thing, growing attractively. There's not a lot of free cash flow going on for the financial services business. Let's see. Now, here are some metrics that are probably pertinent to a financial services business. Return on equity, 63%. And it kind of doubled here from 2018 to 2020. Return on assets and return on equity. I don't know what the implications are for this, what investors might see from a business like this, but I do know that these are not normal numbers. So to me, this is where I'm looking. This is my first instinct to figure out. I would really need to read the 10K of this company, though. It's kind of hard for me to tell anything from just looking at the financials, unfortunately. So it offers a bunch of income products. Okay, managed accounts. Yeah, sorry, that was probably wholly unhelpful. But yeah, because I don't know too much about this type of business. I would want to definitely listen to the latest sort of management talks, the Q&As for the 10Ks, look at the presentations, things like that, because, yeah. Sorry. Gave it a try, Crastius. Tom, this is going back to Magic Formula versus S&P. You agreed that acquires multiple is a good read. Yeah. I started a Magic Formula portfolio with personal twist to filter the list into batches of 7, including free cash flow yield, net debt, and insiders. Let's see how it goes. Yep. Please let me know later down the line, maybe next year or something, how that goes. That sounds interesting. So when you mean you batch it into, or you list it into batches of 7, does that mean that you're only investing in 7 companies every year, or it's going to be 14 or 21 in multiples of 7? Be curious to know. Hey, MLG Gecko, how you doing? Are you actually a pro gamer? You're curious to know about my thoughts on Texas Roadhouse, which I think I've eaten there once. Yeah, so they operate basically steakhouses, and it looks like, okay, they operate almost 550 domestic restaurants and 97 franchise restaurants. Okay, so franchise business is a healthy business. It's good. About $6.5 billion market cap. Let's see. I want to see all the usual suspects: growing revenues, growing margins, growing net income. So if you've looked into this business, I'd love to know what happened here. Whoops. Yeah, but I'd love to know what happened here. So let me scroll up. So we've got in 20, this is just a COVID-related, I'm assuming this is a COVID-related result, this $31 million. So I think we can forgive them for that. And it looks like they're more than rebounding this year. So that's good. All right, let me take a look at the balance sheet real quick. I'll close this out. All right, a healthy amount of cash. It's going to be a little bit more capital intensive, I'm assuming, but yeah, so they have a little bit of debt, but that's not concerning, especially if they're able to pay for it. I mean, the net income should probably more than be able to take care of their interest expenses. Where are those? Okay, it doesn't look like it's in too bad of a financial shape or anything like that. But again, I'd love to, I mean, based on a cash flow multiple, it's kind of high. So I'd love to know what your investment thesis is for that one. And as far as your professional gaming career goes, keep at it if you're trying for it. I think this is pretty attractive. Their return on equity is clearly above a standard business. So based on this one metric alone, I would say that there's probably something special about this business. The question is, I would need to answer is, can they keep this going? What is the moat of this business? I don't know if it's the brand. I mean, I know this company. I've eaten there before. How is it structured? What's the split between how much revenue is being generated by the franchisees versus the wholly owned company or the wholly owned restaurants and things like that? Those are the types of questions that I would be thinking about going into this. So they were clearly impacted by COVID, but those are extra normal times. So yeah, I would look for a write-up on this. This seems kind of interesting because based on a free cash flow multiple, it seems really expensive, but I don't think that's going to capture the whole story here. So thanks for the idea though. Hey, Andrew, good to see you. Was curious if you're open to collaborations. Love your style and content. Absolutely, man. Feel free to, I have an email associated with this YouTube channel, which I can post again in the chat. And also you can DM me on Twitter, but I'm always down for collaborations. So yeah, thank you. Let me repost the email again. There you go, man. Thanks. Tom, my bad for not explaining. This is going back to a magic formula approach. 7 stocks per batch. You would buy a new batch of 7 every 3 months. And you'll do this until you reach a portfolio of 28 companies after 12 months. Okay. Okay. Cool. That sounds like an interesting approach. So you'll gradually build up the portfolio over time, and then probably limit it to 28 companies and then restart the next year. That sounds like an interesting approach. I hope it goes well for you. I don't know if you can hear my dog drinking water right now. Maybe. Okay, I'm going to take a few more of these questions, and then I'm going to wrap things up because I'm going to go do a board game night with some friends. So I have a nice Sunday evening. Let me see, Blake. I appreciate. I saw your comment earlier, by the way. Sorry. We appreciate you, and I appreciate you. Thank you for the super chat. Much appreciated. My thoughts on SWBI. The gun industry is worth $20 billion and has an average growth rate of 3.6. Okay. Average growth rate. Just the market is growing. You mean? I was actually reading an article today about the proliferation of ammunition, or actually the shortage of ammunition. So some companies are well positioned for that, to capture that. So maybe Smith & Wesson is one of those. It's one of these areas that I'm a little uncomfortable just even thinking about investing in, to be honest. I don't necessarily have anything. Yeah, I don't know. It might be one of those untouchable areas for me. However, I do know that they definitely have they definitely have a brand moat for sure. Smith & Wesson has been around a long time. Even if you don't know guns, you probably have heard the name Smith & Wesson. Oops. The revenues look healthy, a little bit lumpy. I would like to see this trend continue to go up, but it doesn't look like it grew very much from last year. And COVID clearly probably had an impact on this doubling of revenues from 20 to 21. I don't know if that's a sustainable growth or not, or if we're going to see some downturns going forward, perhaps as things return to normalcy, but that's, of course, speculation. A little bit lumpy on the net income side as well. And again, as we see there, because their margins have been very good this year and then the last fiscal year, we're seeing a lot of translation from revenue growth to the bottom line, which is good. Let's see if their net debt, good. They have a cash surplus. Love to see it. So the debt isn't going to destroy this company, which I like to see. See their cash flow, because they can report all the earnings they want, but if they're not seeing cash flow coming to the bottom line. All right, this is attractive. So it's trading at about 2 times free cash flow per share, which is a very low multiple for a business that definitely has a moat. And I'm not sure how strong the moat is. And I think that the arms business, or the guns business, is kind of an oligopoly of sorts. So Smith & Wesson is one of the few leading brands that people probably really trust. And then and then we come over to these ratios. I don't know if these are being calculated correctly, but this is a ridiculous number. So this is kind of what's getting my eye popping. These returns combined with the cash flow, the price to cash flow ratio, those are both really attractive. Now, I don't know how long this will go out into the future, how long they'd be able to grow at rates like this. So is it a fluke? Is it panic induced, or is there something else? That would be my big question heading into the research here. So thanks for that, Blake. But I think that is an opportunity. Definitely looks enticing. I just don't know if it's the right one for me. Lars VGP recently bought. It can be traded in Belgium. It's like a REIT. They own and develop warehouses in the East and South Europe. They grow pretty hard and will continue to grow the upcoming years. Okay. So they develop warehouses. Warehouses, I'm assuming for Amazon? For DHL? I don't know. VGP. So the thing with VGP is, I don't know. I might be able to access this company from Interactive Brokers, so I would probably want to check that first before even doing any research, because there are a lot of investable companies that I can actually buy easily. So I would probably spend a lot of time on those over this. But so it develops and manages logistics and semi-industrial. Okay, so it's a REIT, and then I'm assuming they rent out these warehouses to bigger companies and such. So one interesting thing to think about would be how to compare this. Maybe if you're familiar with Heritage Growth Properties, if it's a similar type of situation at all. Okay, so on the income statement, they report rental revenues and then property management fees that make up, this is nice, that makes up the total revenue. So far, the revenue, I'm not seeing a very consistent trend of revenue growth. It's a little bit up and down, so that would be a little bit concerning. But maybe this is more of an asset value play, not necessarily a growth play. But so despite the lumpy revenues, they are really, really reporting a lot of income. Kind of an extraordinary amount. Asset write-downs, these are concerning. You're going to want to know why they're writing down $500 million worth of assets. And it doesn't look like, I don't know if this is an attractive ratio compared to, if this is an attractive ratio compared to, competitors in the space, but it seems like a lot to be writing down every year, but we'll see. Dividend could be attractive. So they're clearly saddled with a lot of debt. So at first glance, this doesn't look too attractive to me, to be honest. But depending on the quality of the tenants within their warehouses, sort of what the reproduction costs of these warehouses are compared to the reported prices on the balance sheet, that's probably something that I would look at first, as opposed to sort of a growing income type of situation. I want to know why they're reporting such high net income, despite having very lumpy revenues and minuscule revenues. Something's setting off a little bit of a radar in my head there as a flag, but return on equities are attractive. So yeah, it's kind of hard to tell what's going on with this situation just based on the financials, but probably worth looking into more. So thank you. But you invested. You said you invested, so I'd love to hear maybe if you have a quick pitch for it. Yeah, because I can definitely see why the growth of that business would be attractive. Just might not be reflected to me at a quick glance on these financials. So yeah. Andrew, you've got the Boston Beer Company. No need to look. But curious if people know, often drink Truly. Okay, so you're doing some market research. If I know people who drink Truly, Twisted Tea, Sam Adams, or Angry Orchard, I'll say the only reason why I know that people drink Twisted Tea is because I watch some professional gamers on Twitch that they have sponsors from Twisted Tea. That's my biggest familiarity with that brand. Truly, I'm usually seeing people drinking White Claw as opposed to Truly, to be honest. Sam Adams, not so much. Angry Orchard, not so much. But I will preface this all with saying that I'm not a big drinker. So I don't really spend a lot of time in bars or consuming this. So a lot of the firsthand experience is, I can't report on that, but that's been my experience so far. But I'm not a huge beer guy, to be honest. Blake, buybacks are making those ratios look better. That's talking about Smith & Wesson. So yeah, that's excellent. I mean, it's hard for me to say that the shares look undervalued, but clearly hopefully management thinks so, and that's why they're buying it back. But yeah, for shareholders, that's always always a good move. Okay. All right, I'm going to probably wrap this up. I had a great time with this one today. Got to talk about a few different companies, babbled on about a lot of stuff. So thanks for tuning in. Blake, again, thanks for the super chat. Really appreciate that, man. Really appreciate that. I hope you all have a wonderful week ahead. And I will probably be back doing this next weekend. So stay tuned if you care to see more. And if not, then it was a pleasure talking to you. Yeah, Andrew, Twisted Tea, you might want to check out. Courage JD and Cloaksy, I know those are two guys that have big followings, and they're also sponsored by Twisted Tea. So that might be an unexpected avenue of research for you. Giuseppe, not a big drinker here as well. Actually, no drinker at all. Cheers from Mexico. Yeah, it's an uncommon occurrence when I when I drink, but yeah, nothing against it. So yeah. All right, guys. Thank you so much. I will catch you in the next one. Thanks for tuning in, and I'll see you later.